first they only wanted to rent, and mostly in Williamsburg, Brooklyn. Now they want to buy, and millennials are so hot on housing right now that builders can't keep up. Diana Olick is live in Washington with those details. Hi, Di.
Hi, Ty. Yeah, while the majority of both single and multifamily home construction is in millennial-dense counties, it actually lags the rest of the nation when it comes to meeting demand. Counties with elevated millennial shares account for 62% of the entire U.S. population, but they account for just 59% of single-family home building. This according to the National Association of Home Builders. And it's not just in urban areas. Counties where more than a quarter of the population is millennial include big markets in California and Seattle, Boston, Portland, and D.C., but also rural counties in Ohio, Kansas, and Missouri. Multifamily construction in millennial counties, which accounts for 80% of all apartment activity nationwide, it's picking up, but still slower than the national pace. And all this to say that the builders are just not doing enough to alleviate this really severe housing shortage that we're seeing. Tyler?
All right, Di, thank you very much. Diana Olick in D.C. Home builders have been a sturdy trade for investors this year. The XHB ETF. That's a lot of letters, man.
Yeah. It is.
Yeah.
I mean, it's too many.
That's taxing. I'd like to buy a vowel.
I think you can come up with a better name
in there. Up more than 40% in 2019, but not all companies are created equal. In a note out this morning, Goldman Sachs initiated coverage on the sector with mixed reviews. Lennar and Pulte scored buy ratings. Goldman slapped sells on D.R. Horton and Meritage. So can the red-hot home builders trade hold? Tim.
Well, ultimately, what we're hearing are some structural issues in the sector that will make some of these guys have trouble getting to the next incremental level of growth. If you look at valuations, they're actually quite attractive, certainly relative to their history. So they trade about 20% cheap to their 5-year history here. I do think these structural issues in terms of affordability are reasons why I still would rather be in the home improvement names. And a Home Depot, which this week kind of wrestled with some really important support levels around 215, 216, and held that 200. I think that's more where you've seen it, and we've talked about the decade that was. Home Depot has outperformed home builders dramatically, as it has the S&P, and I think that trade continues.
And if you look at how XHB or even ITB, which is the home construction index ETF, how that's traded, we're trading around $46 right now. It's bounced against that 3 times. So I don't think you have to rush into it, right? You can play the breakout on this, and you're going to still make all kinds of upside if there really is this shortage. Because if there's a shortage, the next thing that happens, price has to rise, and that's going to be pretty good for the home builders.
The problem is that home builders can perform, but if you look at rates and you overlay it over the stock price, when rates move higher, these things move lower.
Yep.
So they could still have great earnings, but there's headwinds with rates, and I still think we're closer to higher rates versus lower.
Really?
Even around the Fed.
No,
even around the Fed.
Steve's not insane, and in fact, he makes a good point. And think about though the insane move, the 3 standard deviation move we had lower in yields over the summer. You had a place here where yields went from 3 1/4 last November down to 144. So that's the environment that really gave a kicker to these trades that I don't think you have going
Power,
forward.
you know, I'm a big fan of your show, your 2 to 3 show, the Power Lunch.
The Power
it's a fantastic show, and I know that you've talked recently about the restoration hardware, have you not?
Yes, I have.
And you look at that stock, and we've talked about it on this show. Look at the last quarter, a ridiculous quarter. Operating margins now 13%, same quarter last year. 9.5%. I mention that because this is important. This is a very Josh Brown statement. This is important. Listen up. Dan Nathan says that from time to time.
He does, yeah.
But inventories were down 24% year over year on sales growth of 6%. You know what that means? It means margins will be better next quarter. 17 times earnings. The stock has gone up basically 15, 18% in a week and a half. I think it still has room to
I'll tell you,
upside.
my eyeball test confirms what you say, and that is that people are renovating. I just went through a big kitchen renovation.
Right.
World's longest kitchen renovation, by the way, but it's done.
Congratulations.
Have you guys over? But in my town,
No oven, which I thought was special.
no
right?
oven.
You don't
no
cook?
oven. No,
Why put the oven in?
Why cook? Why do
Right,
that? Why waste
exactly.
money on
Another
that?
chiller.
Yeah, all you do is 2 microwaves. You're good. But all that's so many of the houses in my town have signs of contractors out front. Or trucks in the driveway, and that is a good sign for the home supply companies out there.
Yeah, I think so. And again, the margins on the professional services has allowed these guys to be less cyclical. And at the time, we were very concerned about tariffs impacting prices, especially that coming from Asia. These guys have been able to mitigate.